So hello again, this is the fourth part. The fourth part of the recording is dedicated to entry and exit strategies based on the consolidation, the price consolidation in the contracting triangle. So we've looked so far at this Great Britain pound US dollar weekly contracting triangle. What were the clues? What to look for? We've introduced so far the concepts of elongated flats, the 50% line, as you can see, that acts really nice at support and resistance, more like a pivot area. And then what to look, if this is an A, B, C, D, E, and this contracting triangle is going to point to the downside. So if we break this blue trend line to the downside like this, then at the end of this E wave, the contracting triangle ends, and then because of the fact that price comes from the upside here before the contracting triangle, and what we should look, you should look for the measured move of a contracting triangle. Now, whenever you are looking at a contracting triangle as a continuation pattern, so regardless the time frame, even if it is on a 5-minute chart or a 1-hour chart, the measured move of this contracting triangle is the height of leg of the first leg, of the first wave. In this case, wave A. So what you should do is you should take a trend line and you should measure the height of wave A, okay, like this. So let's do it actually like this. So this is the height of wave A. Let's make it of a different color. Let's make it red. And you copy, you take this one, the height of wave A, and you put it at the moment of break. So let's say that the price breaks here. We don't really know, but if the price breaks here, to the downside, then this should be your measured move. So let's write down here that this is the measured move for the contracting triangle. Let's make it black and like this. So measured move for the contracting triangle, and the measured move for the contracting triangle, let's put a number on it, has a value of 113.78 if this contracting triangle that we have here is going to break to the downside. Now this is the measured move. This is how you should treat the contracting triangles regardless of the time frame. You just take the height of wave A and you project it by the moment of break. If what I can tell you from my experience is because of this contracting triangle usually are signaling the end of a fourth wave most of the times, and rarely the end of a B wave when they are continuation patterns. It might be that the fifth wave should be just as small, so just to push lower like this, not necessarily taking the previous lows, but let's say taking the previous lows and then retrace sharply to the upside in terms of Elliott-Wave theory. And if you are staying and you wait for the measured move to come exactly by the pip, then you might find that the last pip is the most expensive one, as this measured move sometimes they just don't come true. So what I would do, I would take a 61.8 or 75% target out of this measurement. So my target out of this measurement would be something like this, something like 124. And then I will look at the small time frames like 1-hour chart and 5-minute chart in order to see more clues about possible reversal patterns that we might have. So this is being called the measured move of a contracting triangle, but also the minimum requirement for the price when price breaks out of the contracting triangle is being called the thrust of the triangle. Now this thrust of the triangle comes in 75% out of wave A. So what you should do, you should measure the length of wave A. So let's take a Fibonacci retracement tool. So measure the length of wave A like this, and we should look for 75% retracement, take a trend line, and measure 75% retracement out of wave A. A little bit of crowding on the chart, but anyways, let's make it pink, magenta, and like this. And then you should take this 75% and put it by the moment of break. So let's assuming that this is the moment of break. Let's delete the fib now. And this should be your minimum objective for the contracting triangle. And the minimum objective would be 120.67. So if you break to the downside, you have also a range based on 120.67. So let's take a shape. So between 120.67 and this 113.78, and this is the minimum objective and this is the measurable. So that would be your target for a break to the downside, if it breaks to the downside. So you might write here that this is target for breaking to the target for downside. So and this magenta line, it is being called the thrust of the triangle and equal minimum target after big breaks. Okay, so the thrust of the triangle minimum target. Let's delete this minimum target because the text is too long and the chart looks quite crowded. So the thrust of the triangle 120.67, 75% out of wave A. Now based on this, this is all the information we can get based on this contracting triangle that we have on the weekly chart. Keep in mind we had been treating this triangle from this moment of time, from this elongated flat. We have the rules for the elongated flat laid down here. All the rules respected. The triangle comes in the form of an ABC, then another ABC to the downside with another elongated flat, then a double correction ABC, X and ABC, then an ABC for the D wave, and an AB, and looking for a C wave black here, and this to end the E wave. And we introduce the concept of the 50% line. 50% line out of the longest wave of the triangle, as this being usually educated guess about the possible ending point for the contracting triangle. And what's even more important is to wait for the triangle to break. If we break to the downside, then this is a continuation pattern, and these are our targets: the thrust of the triangle, 75% out of wave A, or the measure move of the contracting triangle, the whole length of wave A. However, if on the other hand we do break to the upside, because this move that comes to from the upside here established a new low compared with the previous one, so it is possible that we go and break to the upside, then we will need to reassess all this count, in the sense that definitely this is still a contracting triangle with ABC and ABC and ABC and so on and so forth, but it might break to the upside, and if it breaks to the upside, then the 50% line should stay the same, but we will try to look for clues regarding this as being the first leg: A, B, C, D, and E. And then you might ask me, okay, how about this elongated flat here? Yeah, well, in this case, if you break to the upside, then the count for the previous leg in terms of value of waves is kind of different. It is 1, 2, 3 with the whole leg to the downside, 4, and then a fifth wave failure, this being called. And if this is a fifth wave failure, then it is not going to be part of an elongated flat, but a fifth wave failure. And after this fifth wave failure, we started to look to the upside, probably a wave A, and then A, B, C, D, E, and break to the upside. So all eyes now in terms of trading on, let's say, short to medium term based on this weekly chart, because we are kind of approaching the end of this contracting triangle. So look where we break, to the upside or to the downside. Okay, and then even if we break to the upside, to the upside, it's still a continuation pattern, because under this scenario, price coming from the downside like this consolidates in a contracting triangle and then breaks higher. Okay, so we will apply the measured move and the thrust of the triangle and so on at the moment of break, but to the upside. Now this is what I wanted to show you based on this weekly analysis on the Great Britain pound US dollar, and on the next two recordings that I will have, we will take a look at the contracting triangle that we have on the US dollar Canadian dollar weekly chart, and try to do exactly the same what we've done here, but on a different example. So until then,